Alright, let's dive into something that's been bubbling in the financial world recently: the Australian dollar's surprising resilience ahead of the RBA's policy decision. Now, I know what you're thinking: currency movements, interest rates, sounds like a snooze fest, right? But stick with me, because what's happening here is actually a fascinating interplay of global economics, market psychology, and some seriously strategic central banking. Here's the deal: the Aussie dollar, or AUD, has been holding its ground, even trading higher around 0.7060 during Asian hours on Tuesday. What makes this really interesting is that this strength comes just as the Reserve Bank of Australia, RBA, is about to announce its interest rate decision. Personally, I think this timing is crucial. The RBA is widely expected to keep rates steady at 4.35%, but it's not just the decision itself that matters, it's the context. The RBA's move comes at a time when the US dollar is facing headwinds, thanks to a weaker-than-expected July payrolls report. This has sparked a dovish shift in market expectations, and suddenly, the AUD looks a bit more appealing. But let's take a step back and think about it. Why does this matter? Well, the AUD isn't just any currency. It's closely tied to the health of the Chinese economy, Australia's largest trading partner, and the price of iron ore, its biggest export. So, when the AUD strengthens, it's not just about interest rates, it's about global trade dynamics, commodity prices, and investor sentiment. One thing that immediately stands out is the technical resilience of the Australian dollar to US dollar pair. Strategists at Societe Generale pointed out that the pair defended the 200-day moving average in June and has since formed a series of higher highs and higher lows. This isn't just chart jargon, it's a clear signal of improving momentum. What this really suggests is that despite the uncertainty around the RBA's decision, traders are seeing value in the AUD. But here's where it gets even more intriguing: the RBA's decision isn't just about rates. It's about inflation, growth, and the broader economic outlook. Governor Michelle Bullock's press conference will be key. Her tone, her outlook, and her hints about future policy moves could sway markets. What many people don't realize is that central bank communication is just as important as the policy itself. Markets don't just react to what's happening now, they're always pricing in the future. Now, let's talk about the bigger picture. The AUD's strength isn't happening in a vacuum. It's part of a broader trend where risk-on sentiment seems to be creeping back into markets. Investors are starting to take on more risk, and that's good news for currencies like the AUD. But here's the kicker: this risk-on mood is happening at a time when the Federal Reserve's policy path is looking less clear. Cleveland Fed President Beth Hammack recently argued that the Fed might need more than one rate hike to rein in inflation. This raises a deeper question: if the Fed is more hawkish than expected, could the AUD's strength be short-lived? Personally, I think this is where things get really interesting. The AUD's performance isn't just about Australia, it's a barometer for global risk appetite, commodity markets, and the delicate balance between inflation and growth. So, as we wait for the RBA's decision, I'm left wondering, is this the start of a sustained uptrend for the AUD, or just a temporary blip in a more volatile market? What do you think? Let me know in the comments below, and don't forget to hit that like button if you found this analysis insightful. Because, let's be honest, currency markets might seem boring on the surface, but when you dig deeper, they're anything but.